Really, to a large extent, sideways trading for the NSE, but still very much tracking and trading in the red. It's been the story of the shilling and the pressure of the shilling and inflation. Is that still the issue?
Yes, I think a lot, as well as the political end. But I think in essence, we've seen a lot of the bad news out there. There are still quite a number of investors still looking to invest. I think interest rates having risen has really been the damper. So we are seeing more investors looking at the bond side, fixed income, and that way probably starving liquidity from the equity markets.
All right, I mean, what we have been asking over recent weeks is where do investors put their money? Asset allocation, because the equity side is really subdued. Bonds are ticking up, inflation is high, so the risks of investing in bonds and securities also prevails. What would your strategy be?
I think for the bonds, the primary offers have been quite attractive and the yields being offered are quite high. And I don't think the risk of inflation, as is being considered at the moment, will get significantly worse off, especially if you're looking at a longer-term horizon. So I think that from a macro perspective, after next year, we're going to see the situation improve quite significantly in Kenya. Then if you're looking at equities, 1 year out, we are suggesting going a bit defensive. So the energy stocks are what we are recommending. Kenol Kobil has been one of them. Kenya Power and Lighting. Obviously, with the currency where it is, the tourism stocks, agriculturals as well, and companies which might be protected as the currency weakens.
I mean, you've just suggested that Kenol Kobil is a buy, and that seems to be reinforced in terms of market activity in this session and in previous ones. Huge demand for Kenol Kobil, and as a result, the share price has appreciated significantly. Is it purely because everybody's looking at energy as the next growth path, or is there something about the fundamentals here?
I think if you look at Kenol Kobil as a company, it has its own unique features. Just generally as a sub-Saharan energy company operating midstream and downstream, has quite a bit of trading activity as well. And they've already given very strong guidance for the first half. So they're estimating earnings will be up 50%. And the share price are not really adjusted that much, probably I think it's been put a damper because of the general market conditions, but still we've seen it, being one of the few gainers in the market.
Let's talk about what we're likely to see, Eric, on the banking front, because obviously we're seeing CBK rates going up, and that's certainly going to impact on interbank lending rates, but it's starting to have an impact in the sense that banks are starting to hike their own interest rates, and as a result, credit flow to the real economy is something that could be hampered. Going forward, what are we likely to see by way of defaults, the trends, and whether or not we're going to see credit flow slow and the broader impact on the economy?
I think obviously credit will need to slow, and that's likely to happen with high interest rates. But going forward, I think the banking sector profitability is still going to be sustained. First quarter was quite strong. We'll see whether second quarter the trend has been maintained. I think you probably see the avenues of profitability increasingly coming from cost savings. So you're seeing more banks looking at cutting their costs. Earnings from foreign currency income, currency trading. So basically the margins probably have improved with the volatility that we've seen. So we're probably likely to see better margins on the banking on that front than non-funded income. On the interest side, obviously it's going to be challenged, but that's going to take a bit of time to adjust. But I think margins are still going to remain quite healthy.
All right, let's talk about what we're likely to see on the NSE going forward. There's obviously the story of TransCentury and the CMA approving their full listing. How's the market likely to respond? Has it responded?
Well, not yet. I think for TransCentury, when it lists, and that's going to be by introduction, they're not really raising any capital. So it will just be a matter of the counter finding its own level. Whether there'll be any substantial supply. But it's obviously listing at a time when the market is quite, it's not very receptive to equities. And British American is also, promising to come on stream. So, those two will probably put a damper in the market going forward.
All right, you have preempted my next question, which was about British American and whether or not they do well in an IPO. I mean, a lot of people are really questioning whether, as you're suggesting, the timing is right for a lot of these IPOs and corporate bonds that we were told were going to come on stream in the second half of this year. Is it possible that companies would put their plans on hold?
I think they might still come through. The thing will just be about valuation. Whether the valuations will be attractive enough for investors. Obviously, at this time, we'll probably see investors being more demanding in terms of the discounts they require. And the valuations really have to be quite attractive given the market conditions. But in essence, I think there's still substantial liquidity in the market to absorb the issues which are coming up.